G'day mate, my name's Matt Kelly and we're here to go through the second video of the stock market series. This video will cover off where you can start investing in stocks and what I personally use. Please note that this is not financial advice and is targeted as educational content for you yourself to make your own investment strategies. Once again, it is mainly targeted towards the ASX market, but principles can be applied to other markets and other investment classes. To start right off the bat in how to buy a stock, we have to start with defining what a brokerage is, which is basically a means for you to invest money into the stock market. These brokerage companies allow you to buy a share in a particular company, but for that to happen, someone must actually sell you those shares, and vice versa when you want to sell. The way they operate is that they themselves are a business and make money from charging you, the user, fees and commissions from their services. For simplicity's sake, we'll break them into two categories, where one being the full service brokerage, where you essentially pay a financial advisor to either give you recommendations or directly manage your funds. And the other one being an online brokerage, where you can make your own investment decisions, and is what we're going to be diving into further. We're going to be comparing these initially through finder.com, and we're going to be going over some of the stats. So on finder.com, here we've got a whole bunch of different options explicitly targeted towards the ASX, and I have highlighted ones that I've reviewed personally. So choosing the best online brokerage will mainly depend on minimizing fees, as that impacts your bottom line of your costs, which will then in turn impact your return on investments, depending on the size of your transactions. But you also may want a variety of different investment options. For example, being able to buy shares on stock exchanges outside the ASX. But before buying into these shares from other countries, please check out my tax information video, which will be covered in later on in the series. Also keep an eye out, as every now and then promotional bonuses for these companies will come up. For example, they may offer commissionless trades within starting periods. So to start off the bat, we've got here CommSec and NAB Trade. For many Aussies, they'll recognise and trust these brokers backed by the big four banks. And as you can see here, they actually have similar fee structures. Where they actually differ is it seems to be that CommSec is actually cheaper when making transactions underneath $1,000, where NAB Trade actually seems to be cheaper when you're making transactions over 10,000 Australian dollars. So you can see here, when you go above the 10,000 mark here, you start paying $29 per transaction, whereas this one still stays at a flat rate of $20 per transaction. And then when you do go above, this one is 0.12%, where this one's 0.11% of the total cost of your transaction. Cool. So jumping even further into them, when you do go clicking on each link, I'll leave the links in the description below. So for CommSec, it's known for its user friendliness, which for many can be a major impact, and it does provide news and research. The issue though is it can be expensive. On the NAB Trade side, it's fee structure I guess is just a lot better. Just note as well, for both of them, they actually do offer outside exchanges as well. Though they mainly do the ASX, they can offer more expensive fees for purchasing things on the American exchanges, which they have listed there. But for NAB, you can actually see that they've actually got a couple more options there for the Hong Kong and the London stock exchanges. The next one we're going to review is this CMC Markets. So from looking at it just on the surface, it seems to have lower fees than the rest of them, but when you start to dive in further, you actually find out that it's actually trading Forex and CFD. So I personally am not into these sorts of things, please do your own research, because you're not actually buying stocks in this case. It's something very similar, and this is how they get around paying higher fees on their brokerage fees. The last one in this list is actually one that I actually haven't used before, but actually looks quite interesting, is Superhero. It seems to be geared towards only ASX share trading, so its only available market is on the ASX, but it does have the lowest brokerage fee. So please leave a comment down below. Let me know if anyone's given them a go and how they actually find them. So yeah, personally, I've signed up to NabTrade because at the time of when I was signing up and starting my share market journey, they were offering free trades. Though do note, I did get tricked up in the fine print where I didn't actually realize that my 20 free trades or something actually expired after 6 months. So I think I made 5 or 6 trades within that first 6 months, and the next ones thereafter, when I was making them, I actually started to notice that the fees were actually taking into effect. So just make sure that you read all the terms and conditions. I know they can be quite tedious and boring, but yeah, make sure you read that fine print. In terms of those options of discounts based on more frequent trading, it's not something I'm doing at the moment. I actually have reduced the number of trades I make in a year because I am satisfied at the moment with the size of my ASX investment portfolio, and I have been concentrating and consolidating my assets into other areas, such as you've got other areas like your property market. An upcoming one at the moment, which is quite hot, is crypto as well. Sweet. So if you found this video useful, please feel free to support me by slapping a like on the video and subscribing to my channel. Thanks, guys.